Hey everyone, Alex Ionescu here. Welcome to Investor's Guide to the Galaxy. The stock is down after Tesla released Q3 earnings report. Good and bad news. Although before we start, if you find this video helpful, it would mean a lot to me if you crashed that like button and subscribe to my channel. It's totally free and takes just a split second. If you want to show more appreciation, consider subscribing to my Patreon. Now let's dive right into it. Tesla stock price. Yesterday down almost 5%. And after hours down again more than 4%. Past year up 9.3%, just 9.3%. Past 5 years up 1,300%. Now let's look at the Q3 financial results for Tesla. 7.6% operating margin in Q3. 1.9 billion GAAP net income, operating cash flow 3.3 billion, free cash flow $800 million. 3 billion increase in our cash and investments quarter over quarter to $26 billion. 4 gigawatt of energy storage deployed in Q3, more than doubled AI training compute. Our main objectives remain unchanged in Q3 2023, reducing cost per vehicle, free cash flow generation, while maximizing delivery volumes and continued investment in AI and other growth projects. Our cost of goods sold per vehicle decreased to $37,000, while production costs at our new factories remain higher than our established factories. We have implemented necessary upgrades in Q3 to enable further unit cost reductions. We continue to believe that an industry leader needs to be cost leader. Interesting take. During a high interest rate environment, we believe focusing on investments in R&D and capital expenditures for future growth while maintaining positive free cash flow is the right approach. Year to date, our free cash flow reached 2.3 billion while our cash and investment position continued to improve. We have more than doubled the size of our AI training compute to accommodate for our growing dataset as well as our Optimus robot project. Our humanoid robot is currently being trained for simple tasks through AI rather than hard-coded software, and its hardware is being further upgraded. Lastly, with a combined gross profit generation of over $500 million in Q3, our energy generation and storage business and services and other business have become meaningful contributors to our profitability. So total revenue, $23.35 billion, up 9% year over year. Operating margin, I said it before, 7.6%. Net income, $1.8 billion, down 44%. Solar deployed 49 megawatts, down 48% year over year. Storage deployed 3,980 megawatts hour, 90% increase year over year. Good. Tesla location increased 1,129, up 25%. Mobile service fleet up 20%, 1,846. Supercharger station increased 5,595, up 31% year over year. Supercharger connectors 51,105, 31% increase. Now this is interesting. Currently installed annual vehicle capacity. Model California, Model S and X, 100,000 production, this is unchanged. Model 3 and Model Y, 550,000, unchanged. This one changed. Shanghai, Model 3 and Model Y, more than 950,000 vehicles. Berlin, Model Y, 375,000. Texas, Model Y, more than 250,000. And this is a new one. Cybertruck, but pilot production, more than 125,000 vehicles. Tesla semi-pilot production, next-gen platform in development, Roadster in development. Another interesting thing here, market share of Tesla vehicles by region. US and Canada reached 4%. Very good. Europe reached about 3%. China above 2%. Very good. Cumulative miles driven with FSD beta. They reached 500 million milestone. And here is another good thing. This trend, cost of goods sold per vehicle decreased from 39,000 in Q4 2022 to 37,000 in this quarter. Energy storage deployments, exponential growth, year over year, quarter over quarter, it's slow, but it will gain momentum from now on. I think this is a new chart here, services and other gross profit in $1 million. In Q2, they reached a milestone of 150 million. Now it's a little bit down in Q3, I think 125 million. We are planning to grow production as quickly as possible in alignment with the 50% CAGR target we began guiding to in early 2021. In some years, we may grow faster and some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million vehicles for the year. We have ample liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. While we continue to execute on innovations to reduce the cost of manufacturing and operations, over time we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Cybertruck deliveries remain on track for later this year. In addition, we continue to make progress on our next generation platform. And here is a beautiful image of Cybertruck. Man, at what automaker do you see an image like this? It's out of this world, futuristic as hell. Both semi-truck and Cybertrucks, trucks, plural, in the back. It's very nice. I'd like to know your opinion on all of this. Please leave a comment below. If you like this video, please smash the like button so that other people like you see this video, and don't forget to subscribe to my channel. Thank you very much. I appreciate all of you that watch my videos. See you next time.